All right, let's dive right into this comprehensive due diligence explainer on Baidu. Look, if you've been following the Chinese tech sector at all lately, you know Baidu is right in the middle of a massive, truly historic business pivot. We're talking about a tech giant aggressively trying to rewrite its own DNA. They are moving away from their traditional identity as a legacy internet search engine and transforming into a full-stack artificial intelligence powerhouse. So today, we're going to look under the hood using their latest Q1 2026 financials and analyst reports to see if this huge transformation is actually paying off. The absolute crucial point we need to start with is 52%. That is the exact tipping point they hit in Q1 2026, where Baidu's AI-powered business officially overtook its legacy search operations. For the literal first time in the company's history, more than half of its Baidu general business revenue is coming from AI. This isn't just some marketing talking point. It's a fundamental structural shift in how they make money, and it absolutely demands our attention. So to properly evaluate the stock, we're going to follow a strict due diligence framework. First, an overview of the AI transformation. Second, financial health and valuation. Third, the AI cloud growth engine. Fourth, innovation with Apollo Go robotaxis. Fifth, competition and risk factors. And finally, number 6, shareholder returns and ESG. Okay, let's kick things off with Section 1, Overview, the AI transformation. This quote right here really hammers home the point. Baidu just isn't a search engine anymore. Guys, as CFO Haijin Hai noted, AI-driven revenue hit 13.6 billion RMB in the first quarter of 2026. That is a massive 49% year-over-year surge. So even though their total general business revenue only grew 2% year-over-year, the underlying current is incredibly dynamic. The legacy operations are stepping aside, and AI has officially become the undisputed engine pulling this company forward. Moving right along to Section 2, Financial Health and Valuation. Looking at their Q1 2026 balance sheet, honestly, Baidu maintains a fortress-like position. They are sitting on over $40.49 billion in total cash and investments. Compare that to their total liabilities of roughly $22.79 billion, and you can see they have a completely massive liquidity buffer. That is absolutely crucial for funding their intense R&D and capital expenditures. Plus, their operations are highly cash generative. They brought in $387 million in operating cash flow in just the first quarter alone, which marks their third straight positive quarter for cash generation. What's super interesting to think about here is CMB International's sum of the parts valuation target of $132 a share. When you break down how analysts are valuing the company right now, they assign an incredible $38.30 per share just to Baidu Cloud alone, and $58.20 to their net cash. So, with the stock currently trading at a highly undemanding multiple of roughly 4 times its estimated 2025 earnings, once you strip out that giant cash pile, the market seems to be heavily discounting the core business. All right, Section 3, Growth Engine, AI, Cloud. You can clearly see the structural shift playing out right in front of us. While the legacy ads business is taking a really steep 29% year-over-year hit, dropping down to 10.2 billion RMB. Their AI cloud infrastructure is booming at a 79% growth rate. It's wild. So the essential point for us is that Baidu is in a literal race against time. The question is, can their high-octane AI cloud growth outpace the deterioration of their traditional search and ad revenues? If we slice up that 13.6 billion RMB in core AI revenue, cloud infrastructure is by far the biggest piece at 8.8 billion. And within that slice, GPU cloud demand is absolutely skyrocketing. It posted an incredible 184% year-over-year surge, mostly because clients just need massive compute power for their AI training and inference workloads right now. The rest of the pie is made up of AI applications at 2.5 billion and AI native marketing at 2.3 billion. In the application space, Baidu is rapidly deploying some cool new tools. They've got DoMate, which is an everyday productivity agent, and Mutadaw 3.0, a really intuitive vibe coding platform that lets enterprise users build standalone apps using just natural language. And this demand is broad-based, spanning everything from aeronautics and gaming to advanced manufacturing. Let's shift gears a bit. Section 4, Innovation. Apollo Go robotaxis. In just the first quarter of 2026 alone, Apollo Go racked up an absolutely staggering 3.2 million fully driverless rides. The sustained triple-digit year-over-year growth proves that this is no longer just some R&D science project. It is a rapidly scaling commercial operation. Seriously, look at these operational milestones.
By the end of 2024, thanks to scale effects and high order density, Apollo Go officially achieved break-even in Wuhan. Their progress is so significant that Fast Company actually ranked them second globally in the automotive category, right up there alongside Alphabet's Waymo. And it's not just limited to China either. Apollo Go is aggressively expanding its international footprint, progressing operations with a standalone app in Dubai and preparing for testing in major European hubs like London and Switzerland.
Now we have to talk about the flip side. Section 5, competition and risk factors. Objectively speaking, looking at the user data from AI product tracker AICPB, Baidu is under massive pressure in the consumer AI space. Their flagship Ernie bot currently has around 13 million monthly active users, but that trails way behind ByteDance's Doubao at 78.6 million and the open source disruptor DeepSeek at 33.7 million. DeepSeek in particular has completely upended the sector by offering advanced AI capabilities at a fraction of the operational cost, and that's forcing legacy players to adapt fast. This brutal competition actually forced a complete strategic 180 for Baidu. CEO Robin Li had long championed closed-source models. He thought it was the only viable path forward. But, facing market realities, he totally changed tack, saying that opening things up will help spread the technology faster. Embracing open-source distribution is a direct counterattack to win back market share and mind share among developers. Check out this timeline to see how that new strategy is actually rolling out. In May 2026, they launched Ernie 5.1, which actually topped the Elementatex leaderboard among Chinese models. But the real game changer happens on June 30th, 2026, when they officially make their older Ernie 4.5 series open source. This clears the deck for their next generation Ernie 5, which is planned for launch in the second half of 2026. It's a highly calculated move, right? They're commoditizing their older tech while charging a premium for their absolute latest advancements. Finally, let's wrap up with Section 6, shareholder returns and ESG. So, while they're pouring massive amounts of capital into AI infrastructure and scaling those robotaxis globally, management is actually still throwing a bone to shareholders. They utilized $172 million for share repurchases in Q1 of 2026 alone. This buyback program is pretty notable given that favorable, undemanding valuation we discussed earlier, trading at just roughly 4 times its 2025 estimated earnings when you back out that huge cash pile. Furthermore, they're maintaining transparent corporate governance, having released their comprehensive ESG report in May, detailing their sustainability initiatives and Libra policies. So what's the ultimate takeaway for your due diligence here? Look, Baidu's balance sheet is incredibly strong, and their revenue mix has officially crossed the threshold. They are a true AI powerhouse now, driven by staggering GPU cloud demand and rapidly expanding robotaxi fleets. But as they bleed legacy ad revenues, can this impressive technological pivot outrun the intense, low-cost competition breathing down their neck? That is the pivotal question you've got to answer before adding Baidu to your portfolio.